Good evening and a very warm welcome to this edition of the Rush Hour, the show that gets you the rush of news as you get set to wind down the business day. It's also the show that sets off our evening primetime telecast here on ET Now. I'm Vikram. And first up this evening, we are tracking the dichotomous global growth, as it were, starting with Japan and then taking it across to Europe. So here's the situation in Japan. Japan's GDP, its gross domestic product, has beaten analyst estimates, expanding at an annualized 2.7% in the first quarter of the year. And this is according to the information that we've been poring over, the latest data that's coming through. It's important to note over here that the beat on estimates comes after a pickup in domestic demand in Japan. Remember, Japan is the world's third largest economy. The country has seen its inflation running at a 4-decade high. Now, the central bank of the land of the rising sun, the Bank of Japan, as well as the country's government, they are hyper-focused on sustained wage hikes for further growth in the economy. So this revision now has taken care of fears of a technical recession for the second half of 2023 in Japan. But then you have the other end of the spectrum from Japan. This is the kind of dichotomous story of global growth that we are talking about. It takes us to Europe. In a telltale sign of global weakness here, the Eurozone's economy has actually shrunk. It's shrunk by 0.1% between January and March this calendar year, which means that the 20-nation economy, the Eurozone, has entered into an official recession. Meanwhile, the ECB, the European Central Bank, has signaled that it is likely to raise interest rates by another 0.25 percentage point at its next meeting. That's the indication. So what does this really mean for global economy, the Eurozone in particular? Let's discuss this with Anurag Singh, Managing Partner at Ansid Capital, joining us on this edition of Rush Hour. Always good to talk to you, Anurag. Do tell us about this dichotomous global growth story that we are currently witnessing. As patchy as it is, are we expecting the patchiness to show up that much more? And how will the ebb and flow in the global markets reflect it?
Vikram, good evening. First of all, welcome back. Long time no see. So good to see you back again. Vikram, I think in a sense, I think we all need to place this in context, especially the Eurozone inflation. You know that even the World Bank projections and the European Union projections for their GDP for the next 3 years is not to the tune of we project in India 5, 6, 7, 8%. They work between 0 to 1% broadly. So I think if the projections are that the economy will grow to maybe 0.5% for the Eurozone for next 2-3 years, then I think it can always slip into recession with a slight mistake on the interest rate sides. And I think that's what is really coming to the fore. Now, they are at 3.5%. Inflation is still bothering Europe, right? Understand they had cheaper energy and cheaper supply chains. So all of that has got disrupted. So I think it's not very surprising that some of these countries do need a bit of a, recession is a strong word, Vikram, but they need a bit of a reset, to the new world where energy is no longer going to be cheaper. And then so then the other goods need to be cheaper to accommodate for that. And European economy usually, they have strong labor laws, unions are strong. So it takes a little bit of its own time to settle down. So I think it's fine, but it's expected. It will do them a lot of good because ultimately inflation is the major battle that everybody has to confront, right? Slight drop of 1% in GDP is not that alarming, Vikram, I would say.
Yeah, but the way in which Japan has tackled inflation with its ultra-loose policy is in stark contrast to how the world, including India, has tackled it. Now, how has that reflected in how the global markets have really panned out in this entire period where we are looking at countries tackling inflation with the kind of interest rate cuts that we've seen in most parts of the world, unlike in Japan?
So I think good that you brought about Japan. Vikram, we need to understand Japan peaked out in 1989 and their stock market is on nominal terms about still 33% below the levels they touched in 1989, right? For those who are listening, equity market lovers, please, this also happens in a country like Japan. 1989, they peaked out, they're still 33% below that. If we accommodate for inflation, they're about 60% below the peak they touched in 1989. So take that. Japan had a peculiar problem. Inflation never was, because since they had this demographic decline, there were less consumers, and then less job seekers. So ultimately, economy went on a tailspin, and they never had an inflation problem. So I think it is acting while the entire world was raising rates. Bank of Japan was not. They were just managing a bit of a yield control. Their inflation is 3.5%. It is still not that high considering the rest of the world. So they had, I think we need to take Japan as a bit of an isolated case, which had a 30-year, 40-year problem. Coming to India, Vikram, I think India is comfortably placed, right? So, and I think that's the whole story, Vikram. We have to see that, this, after pandemic, the economy will turn out differently for different countries. So India will have its own domestic consumption story. I understand market cares a little bit about the technology and pharma, which are more export-oriented sectors. But I think this is the time where we can rely more on the domestic front and let that economy grow, because India has not it doesn't have a demographic problem. It has everything going for it, right? So we just need to get the policies right, and India will be just fine. I understand there will be a bit of 1 or 2% blip, because if the world is not growing, then it will also impact India as well to a certain extent, but certainly not alarming, right? So I think RBI is taking its right step. At some point, it needs to decouple from what the Federal Reserve is doing and the Eurozone is doing, because each is grappling with very different problem. We come to US, we can talk about it, but it has a very different problem, Vikram.
Absolutely. And very quickly, since we start talking about the US, we're seeing the surge in jobless claims. Now, how is that going to immediately play out on Wall Street? We're seeing it open now.
Yeah, that's a good point. I think Street is looking that as a bit of a positive sign, because Street wants to see a little bit of spike in the all-time low unemployment of 3.4%. So I think if that spikes up, it hovers between 3.4 to 3.6. Any number above 4% is good. So continuing claims are at 1.7, 1.8%. That number has to grow to maybe above 2 million. And anything on a, usually to get a labor cool down, the number has to grow. So today was 265, anything above 300 is good. At least it's inching towards that direction. Understand, because Vikram, inflation won't cool down if the labor market doesn't settle down. So Vikram, that's the unique problem that US faces.
Certainly does. We'll see how they tackle it. Anurag Singh, always good to talk to you and get your perspective on global markets. Thanks very much for joining us on this edition of Rush Hour.